Akinong. It's 6 a.m. on a Tuesday morning. Margaret is 71 years old. She's been retired for 5 years. She lives on Social Security and a small pension. Everything has been predictable, stable, safe. Then her phone buzzes. She checks her bank account, and her hands start shaking. Her Social Security deposit didn't arrive yesterday. Instead, she sees a notice from her bank saying her account has been flagged. She doesn't know why. She didn't do anything wrong. She just deposited her late mother's inheritance check, $15,000 in cash from the estate, into her savings account to help with her medical bills. And now she's terrified. Her mind races. Is the government taking her money? Will she lose her Social Security? Can they freeze her account without warning? Did she break a law she didn't even know existed? Margaret is not alone. Right now, millions of seniors are living with this exact fear. And I'm about to tell you the truth about this bank rule. The truth that the viral videos and social media posts are not telling you. Milena, on camera. Hello, I'm Milena. I'm a senior policy analyst and retirement finance expert. I've spent the last 15 years helping retirees like you understand the complicated rules that affect your money, your benefits, and your peace of mind. And I need to be direct with you right now. If you've been worried about the $10,000 bank rule, I have both good news and important news for you. The good news, your account will not be frozen, your money will not be seized, you will not go to jail for depositing your inheritance or your retirement savings. The important news, there's a specific mistake that many seniors are making right now, and that mistake could cost you thousands of dollars in lost benefits, delayed payments, or worse. That's why you need to watch this video all the way to the end. Because I'm going to show you exactly what this rule says, why it exists, and most importantly, what you must do right now to protect yourself. By the time this video is over, you will understand why banks file reports on your large deposits, why that is not a threat to your money, what the law actually protects you from, and the 3 exact steps you need to take today to keep your money safe. Let's start with the story of Robert. Robert is 68 years old. He worked as a construction supervisor for 40 years. He paid into Social Security. He paid into his pension. He did everything right. When he retired, he had $20,100 per month in Social Security, $800 per month in pension, $47,000 in his savings account. He was careful with his money. He didn't spend recklessly. He was proud that he had something saved for emergencies. Then his wife got sick, really sick. The medical bills came in like an avalanche, tens of thousands of dollars. His insurance didn't cover everything. So Robert made a decision. He decided to sell his late father's house, the house he inherited 2 years earlier, but had been renting out. He sold it for $95,000 in cash. He needed that money immediately for his wife's medical treatment. So he went to his bank, he made a deposit. $95,000, all cash. The teller looked at the amount. She made a few phone calls. She told Robert the bank would need to file a report with the government because of the amount. Robert didn't worry. He had done nothing wrong. He was just depositing his own money from his own property sale. The bank filed what's called a CTR, a currency transaction report. It's a routine form. The bank files thousands of these every month. It's federal law. It's not optional. But here's what happened next. That report triggered an automatic flag in a government database. Robert didn't know about this flag. He didn't get a phone call. He didn't get a letter. A week later, Robert got a notice from the Social Security Administration. His benefits had been suspended. Not reduced, suspended, completely stopped. The reason? According to the letter, the SSA was conducting a routine review of his account. Robert called the SSA immediately. He was on hold for 2 hours. When he finally got through to a human being, the representative didn't have any answers. She said his case had been flagged for investigation. The process could take 30 to 60 days. 30 to 60 days. Robert's wife was in the hospital. He needed his $2,100 per month in Social Security. He needed it now. And he had no idea why his benefits had been suspended in the first place. It took Robert 47 days to get his benefits restored. During those 47 days, he missed 2 mortgage payments. He couldn't pay his wife's hospital co-pays. He had to borrow money from his daughter. And he spent countless hours on the phone with government offices that couldn't explain what had happened or why. The worst part? Robert had done absolutely nothing illegal. His house sale was completely legitimate. His inheritance was his to keep. He had every right to deposit that money into his own bank account. But because he didn't understand the rule, because nobody explained it to him clearly, he lost his benefits for almost 7 weeks. Robert's mistake was not the deposit itself. His mistake was not knowing who to contact before he made the deposit. He didn't know there was a specific process. He didn't know there were protections for seniors. And he didn't know the difference between a routine bank report and an actual accusation of wrongdoing. You are not going to make Robert's mistake, not today, not after this video. Let's talk about what this rule actually is, and I'm going to read directly from official government sources, so there is no confusion. The rule is called the Currency Transaction Report Requirement. It's part of the Bank Secrecy Act. Here is what the law actually says. According to IRS Publication 1544, the official government document, financial institutions must file a currency transaction report when they receive deposits or withdrawals totaling more than $10,000 in cash in a single transaction or related transactions within a business day. That's it. That's the rule. When you deposit more than $10,000 in cash into your bank account, the bank is required by federal law to file a report. Not with the police, not with a judge, with the IRS and an agency called FinCEN, the Financial Crimes Enforcement Network. The bank files this report. It's called a CTR, and here's what is extremely important for you to understand. The bank files the report, not you. You do not file this report. You do not have to do anything special. The bank does it automatically. It's routine. It happens thousands of times every single day in America. When your home sells for $150,000 in cash, CTR. When your grandmother's estate distributes to you $80,000, CTR. When your 401k rollover comes in as a wire transfer that you then deposit, CTR. These are all completely legal, completely normal transactions, and they all generate CTRs. The IRS, in their own official publication, says this. Although many cash transactions are legitimate, the government can often trace illegal activities through payments reported on complete, accurate forms. In other words, the government is not assuming you did something wrong just because you made a large deposit. They are just keeping track of large cash movements. They are tracking money flows. That's all this is. Now, here's the trap that many seniors fall into. And this is critical. Seniors see that the bank has filed a report, or they hear through social media that the government requires banks to report large deposits. And they jump to a terrible conclusion. They think, if the bank reports my deposit to the government must think I'm suspicious. The government must think my money is illegal. The government is going to freeze my account. This is not true. Filing a report is not an accusation. Filing a report is not an investigation. Filing a report is a piece of paperwork. It happens every single day. It is completely routine. The CFPB, that's the Consumer Financial Protection Bureau, a federal agency that protects you as a consumer, has explicitly said that banks cannot freeze your account simply because a CTR was filed. Banks can only freeze your account in very specific circumstances. Number one, a court order tells them to, like if you have unpaid debts, and even then, Social Security is protected. Number two, you ask them to. Number three, they discover fraud. Someone unauthorized has used your account. Number four, the bank closes your account entirely for other banking reasons, but not because a CTR was filed. That is not legal. That is not allowed. In fact, there's a law called the Taxpayer First Act. Congress passed it in 2019. And here is what it does. This law specifically limited the IRS's ability to seize your money. The government cannot seize funds based on a large deposit alone. Here are the rules. The IRS can only seize your money if, and these are both required. 1. The money came from an illegal source, or the money was structured on purpose to hide a different crime. We'll talk about structuring in a moment. And 2. The person had criminal intent, meaning they knowingly, deliberately tried to break the law. If both of those things are not true, the government cannot touch your money. And if the government does try to take your money, you have rights. The law gives you 30 days to request a hearing. You can say, this money is mine. It came from a legal source. I did nothing wrong. And the government has to prove otherwise in court. If they cannot prove it within 30 days, your money gets returned. This is called the innocent owner defense. And seniors with legitimate sources of income, Social Security, pensions, inheritances, home sales, you are protected by this law. Now let me address the word that's causing panic on social media, structuring. You've probably heard this word. You've probably seen YouTube videos with titles like the structuring trap that could destroy your retirement. And you've probably gotten scared. Let me explain what structuring actually is. Structuring means deliberately breaking up a large cash transaction into smaller transactions, specifically to avoid the $10,000 reporting requirement. For example, if you have $25,000 in cash and you intentionally make 4 deposits of $6,000 each on different days, specifically because you do not want the bank to file a $25,000 CTR report, that is structuring. Structuring is illegal. It is a federal crime. The penalties are serious, up to 5 years in prison and $250,000 in fines. But here is what is important. Structuring is only illegal if you did it on purpose to break the law. Making regular deposits because that's when your money comes in? That is not structuring. Depositing your Social Security check on the first of the month every month? That is not structuring. Making one deposit of $12,000 because that's your inheritance and that's the amount you received? That is absolutely not structuring. Structuring requires intent. It requires you to deliberately, on purpose, break up your money on purpose to evade reporting. If you're making normal deposits of legitimate money from legitimate sources, your pension, your Social Security, your inheritance, your house sale, you are not structuring. Period. The government has to prove criminal intent. They cannot assume intent just because you made a large deposit. That is not how the law works. And here's one more protection for you. After the 2019 Taxpayer First Act, the government cannot seize money from someone who structured transactions with legal source income. Even if you structured on purpose, if the money came from a legitimate source, your job, your business, your inheritance, the government cannot touch it. They can only seize money that was obtained illegally or that was structured to hide another crime. This is huge protection for seniors. Now, here's what you need to do. I'm giving you 3 exact steps. Write these down. Do these today. Step 1. Know your sources of income. Make a list right now. Write down your Social Security amount and deposit date, your pension amount and deposit date, your 401k distributions or IRA withdrawals, and when they come, any inheritance or property sales you're expecting, any lump sum payments from insurance or settlements. All of these are completely legal. All of these will likely trigger CTRs if they're large, and that is completely normal and fine. When you know your sources of money, you will not be surprised by large deposits. You will understand why they're happening, and you will not panic. Step 2, contact your bank before you make a large deposit. This is crucial. Do not just show up at the bank with $40,000 in cash and expect the teller to be ready. Call your bank first. Say this: I am planning to deposit a large sum of cash into my account. It is money from my inheritance or my house sale or my pension distribution or my business. I want to make sure I prepare correctly. What do I need to do? Most banks will ask you, where did the money come from? Do you have documentation of the source? How much is it? All of these are normal questions. Answer them honestly. The bank is not investigating you. The bank is just doing their job to comply with federal law. By calling first, you eliminate surprise. You eliminate confusion. And you show the bank that you are being transparent and cooperative. That matters. That makes a difference. Step 3. Keep all documentation of the source of your money. This is your protection. If you received an inheritance, need the will, the estate documentation, the check or wire transfer receipt, the bank statements showing the deposit. If you sold your house, keep the sales contract, the closing statement, the proof of sale. If you received a pension distribution, keep the distribution letter from your pension provider, your bank records. If you received Social Security back pay or a settlement, keep the official letter or check, the bank record. Keep these documents for at least 5 years. Put them in a safe place, a safe deposit box, a fireproof safe, a family member's home. Somewhere they will not get lost. Why? Because if anything goes wrong, if for some reason your account gets flagged, if you're contacted by a government agency, if anything seems unusual, you will have proof that your money came from a legitimate source. That proof will protect you. It will take your case from investigation to closure in days instead of weeks. These 3 steps are your armor, your protection, your peace of mind. Step 1. Know your sources of income. Step 2. Contact your bank before large deposits. Step 3. Keep documentation of where your money came from. Do these 3 things and you will never have to fear the $10,000 rule. I want to tell you something important, and I need you to hear this clearly. The information I just gave you, This is not something you should rely on YouTube to remind you of. This is not something you should hope you remember when you need it. This is critical information that will protect your retirement, your benefits, and your peace of mind. And the rules change. New rules come out, new laws are passed, new protections are created, and old rules get updated. You need to have access to reliable official information, not from TikTok, not from Facebook, not from strangers on the internet. You need real guidance from real experts, updated regularly, in plain English, written for people like you. That is why I created the Global Senior Alerts official WhatsApp channel. This is a private, secure space where seniors get real information about Social Security changes, pension rules, banking updates, insurance policy changes, travel restrictions, Medicare updates, everything that affects your retirement and your money. You will receive alerts directly to your phone. No spam, no sales pitches, just real information to protect you. And when you join, you get access to something I created specifically for you, the Senior Benefits Protection Guide. This is a free PDF guide. It covers the $10,000 bank rule explained, how to protect your Social Security, what the Taxpayer First Act means for you, your rights if your account gets flagged, how to respond if government agencies contact you, templates and forms you can print and use. This guide is yours. Free, forever, just for joining the channel. To join the Global Senior Alerts official WhatsApp channel, click the link in the description below this video, or go to the link in my channel's About section. When you join, you'll immediately get access to the Senior Benefits Protection Guide. You'll get real-time alerts about changes to Social Security, Medicare, banking rules, pension rules, travel rules, everything that affects your life as a senior. And here's what's most important. You will never feel alone with these rules again. You will have access to expert information. You will have people who care about your security. You will have a community of seniors just like you who are protecting their retirement and their peace of mind. The fear you felt at the beginning of this video when Margaret was looking at her bank account, terrified, that fear does not have to be your reality. You can be informed. You can be protected. You can have peace of mind. That starts by clicking that link and joining our community. I'm Elena. I've been helping seniors understand complicated rules for 15 years, and I promise you, once you understand these rules, once you know your rights, once you have the protection plan in place, the fear goes away. You can live your retirement with confidence. Click that link now. Join the Global Senior Alerts official WhatsApp channel. Get your free Senior Benefits Protection Guide. And let's make sure you and your family stay safe, informed, and protected. I'll see you in the channel.